Hmm. Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, March 24th, 5:52 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. Change in the market state to short-term uptrend based on price action. Now, we'll get into this a little later, but let's check the trend gauge first. Market leaders upgraded from red to neutral with a green sub arrow as some excellent action. We've been talking about how our leadership list had been growing. We started a 21 over 21 leaders list last week. We'll get an updated one today. Most of them from last week acted well, and we had some follow through strength today. Also, an upgrade on our short term trend moving average. We use the 21-day moving average, upgraded from red to yellow, neutral, red sub arrow as the indexes got back above their short-term 21-day moving average today. We don't take it all the way to green until we get multiple closes above that level. Today, very easily could have been a fake out. Medium term, all the moving averages are still below their 50-day moving average as the averages are not stacked the way we want them to be due to the recent correction. Long term, we're at neutral, green sub arrow, recapturing the 200-day moving average on a few indexes today. We'll take a look at them when we get to the charts. So, what happened today? Over the weekend, some indications from the Trump administration that there could be some easing on tariffs, which are scheduled to go into effect on April 2nd, um, based on some various economic or political and geopolitical factors that they're weighing. But we had a strong close on Friday, and the futures gapped up on that news, and we opened near the overnight highs. And then that open was basically the low of the day, and we continued moving higher. Very clearly, today was a price follow through day, but the traditional O'Neill slash IBD rules require price and volume. But you couldn't go by volume today because four times a year we have this big options and futures pricing expiration. Contracts roll over, and there's rebalancing going on with it being close to the end of the quarter. What happens is volume always four times a year spiked well above average. So if you're trying to compare the price action of today, or the volume action, I should say, to Friday, it's just not applicable. So we're going to say gap and go on tariff easing with a price follow through day. There were also a few near misses last week as to whether or not we had a follow through day with some of the decent price action, and we saw improvement in the leader. So let's call it a price follow through day. And again, you always need to see it's important that we don't get distribution over the next 3 days. That's really what we'll be looking for. Distribution over the 3 days after a quote unquote follow through day really throws the rally into question historically. So that's really what we'll be on the lookout for. Here are the numbers. 21 over 21 list up an average of 2.8%, 16 up, 4 down, 1 neutral. The big eight rocking on the back of Tesla up almost 12%. Thanks to Tim Walls for putting in the bottom with his uh, stand-up comedy routine, checking the uh, price on Tesla, saying, "Oh, Tesla 225 and falling." Well, Tesla has gone nowhere but up since then. Sometimes things happen that way, but at any rate, Tesla's been strong over the last week since that statement, and the big eight up an average of 3.4% today. The RG8, this is our eight growth ETF composite. All of them cleared their 21-day moving average today, up an average of 3%. S&P 500 gapped up 1.1%, closed up 1.76%. Equal weight S&P just slightly lower than that. We'll take a look at the rest of the indexes. You can see their positive action. We'll take a look at the charts momentarily. Global 60/40 stock and bond up 0.77%. Our flagship portfolio. GROTECTION up 1.11%. We continue to dip toes back in the market, and we're getting positive feedback from the exposure that we're putting on. So let's go to the charts. We'll start with the S&P 500. And we talked last week, especially on the podcast and the Thursday video that I did, about how we're in this tight consolidation over the last 5, 6 sessions. Bulls wanted to see a breakout above it, but a breakout above it right into the 200-day and declining 21-day moving average would have not been as strong as we would want it to be. But what did we get is a breakout above it, a close near the highs of the day, and a clearing, not by much, but still a clearing of the 200-day moving average and declining 21-day moving average. So what do bulls want to see next? A little bit of sideways or mild down action over the next couple of days. Pull back to the 21 and 200, don't severely break it, and have the slope of the 21-day moving average start to curl up along with price. That's Shangri-La for what the bulls. That's exactly what they want to see. Worst case scenario would be a break below today's lows and a move back into this consolidation, because that would just constitute a failed breakout from this little level here. And then we'd be looking at how leaders held up if the indexes could not hold this strength. Onto the NASDAQ 100, into the declining 21-day moving average, hasn't cleared the 200-day moving average yet, because we're well aware of the relative weakness of the Mag 7 has been holding back the market cap weighted S&P and obviously also the NASDAQ 100. So next, but again, breakout from this 5, 6 day consolidation here. Again, what we want to see is not giving up much of today's gains at all, and certainly stay above today's lows. Let's go to equal weight S&P 500. Also, with a close slightly above the declining 21 and the 200-day moving average. The consolidation is slightly different on this. In fact, we hadn't broken above the highs from last week on it. And that is just, again, because of different action, unequal weighting as the value stocks continued to outperform last week. But growth has taken the lead over the last 2 to 3 sessions. And you can see that from the relative strength on the NASDAQ 100. And well, the Mag 7 stopped going down today. So that's the best we can say. A lot of those charts are still under repair. A couple of them looking okay. On to the final big cap index, Dow Jones Industrial Average, clearing the 200 and the 21 decisively. Same situation. We'll be looking for a moderate pullback here. Now on to the recently weakest two indexes, that being mid caps and small caps. Here you can see mid cap making a higher high versus last week. Not as many days in that consolidate. Well, I guess you could say so, but it was certainly a lot looser. But clearing that 3,000 level and above the 21-day moving average, we would like to see any pullback hold this 3,000 level. Finally, the Russell 2000 clearing the 2,100 level and the 21-day moving average. 200-day moving average is all the way up here at 2,200. So small victories first. Like, we want to hold the 21-day moving average on any pullback in the Russell. So those are the major indexes. Next, let's go to the VIX. Nice pullback here, down by 9.3% today. You can see VIX dropping over the last 2 weeks. This is coinciding with the market trying to carve out a bottom. On to the dollar next. Dollar, fourth day up in a row, but not keeping stocks from having success coming into the declining 21-day moving average and 200-day moving average. So you can see after a big drop down in the dollar, it's been consolidating here over the last 5 days. Let's see, dollar. Next up, precious metals. That's this strength in the dollar has put a pause on the strength in precious metals. Gold pulling back for the third day, but just sitting on the 8-day moving average. Silver sitting on the 21-day moving average. Not a failed breakout back into the base, but not a miserable failed breakout, but it needs to hold Friday's lows and the 21-day moving average. Certainly no relative strength here the way it had been displaying it two weeks ago. Gold stocks, GDX, pulling back to the 8-day moving average. Almost a perfect pullback here. Lighter volume the last 3 days on the pullback after higher volume on the breakout. This still looks fine. And finally, Bitcoin, strong day up 5.2%, clearing its 21-day moving average and never broke the 200-day moving average. So although Bitcoin has shown no relative strength going back to November, it is just consolidating in this really big base here. About halfway through, uh, about halfway through this base that it's forming, but reclaimed this 50 level, which I think corresponds to around 89, 90,000. Any pullback again, we want to see hold the 21 and 8-day moving averages. On the bonds, bonds pulling back for the second day. That means rates going up. You can see the BND dropping, the TLT, the long bond dropping for the second day as well. And this means prices down, yields up. TYX up for the second day in a row, arguably the third day in a row, as this looks like a positive reversal on yields, negative reversal on the bond price. TNX, the 10-year, second day up as well. That's our inter-asset correlation chart section. Let's go to the tail of the tape. Now, again, market state updated to short-term uptrend. All of these secondary indicators, the stochastics for the indexes, the RG8, the NASI, weakness in the dollar, yields coming off, the percent of stocks versus the 5-day, all of these were set up to move higher, and that's what we saw this morning. Sometimes the weight of the secondary indicators gives you some insight to what's going to what's going to happen primarily, that being price and volume. But until it happens, it's just a plan. Sentiment, mentioned the VIX dropping, fear and greed up 6 to 28, and this AAII 4 straight weeks above 58 for bears. The We know there's political weighing going into this, but they're wrong as of right now with the price follow through day. We'll see where this is when these update on Thursday. NAAIM had dropped from the 90s to 60, so certainly a lot of room for managers to reinvest their funds. We need a second day above the 21-day moving average to cement the bull case. And then also we got to stay above the 21 on any pullbacks after that. That'll take us off the bear case and firmly onto the bull case. PMI data after the market open really was it was kind of in line, no impact on price. Friday, looking ahead, we've got PCE inflation data. He's coming into today. The 200-day moving average for the S&P, we broke above it. For the equal weight S&P, we're basically right on it. NASDAQ 100, we haven't cleared it yet. Leaders, positive action very clearly. Day count from 5-day consolidation to a break above that. So up one, fourth day above the 8-day moving average, first day above the 21-day moving average. The slope of the line basically flat on the 21. We need to see some continued action, positive action to get that slope turned higher along with price. Today, certainly enough to upgrade our expectations from negative to neutral. We do need to see the Qs clear the 21 and stay above it, and same thing with the S&P. You can see the levels. We talked about that, the ranges. How about sectors? 10 of the 11 spider sectors higher. The only one down was utilities, led to the upside by semiconductors, consumer discretionary, banks, and retail. Gold and silver stocks weak, as I said, along with utilities. Portfolio, add to our SSO position, started a position in ARK-K. This upped our adjusted beta from 0.7 to 0.8. Our balance at risk, 2.66%. To the downside, you can see the portfolio there. And the feedback that we got by dipping some toes in the water last week continued to show strength, and that was rewarded today. So the bottom line on the day, gap and go on tariff easing, follow through date on price, not on volume, but that's due to OPEX uh, or OPEX. I guess, yeah, OPEX. Tuesday, tomorrow's keys. Now we want to focus on the 21-day and the 200-day moving average for the S&P and the Nasdaq. Want to see some confirmed follow through on leadership as well. Let's go to the charts and we'll get the updated 21 over 21 list for this week. We'll start with what we own in the portfolio. DoorDash, nice little power of three. Power of three means you've got three moving averages, short term, medium term, long term. Actually, in this case, it's ultra short, short term, and medium term, all stacked up, and price breaks above them convincingly. That's what we see with Dash today. Nice action there. We own it. Netflix, not so strong today, but you can see these blue bars over the last 2 weeks. Netflix clearly being accumulated and broke above that little shelf over the last week and a half of resistance. Palantir broke again, another power of three, breaking clear of this little shelf. We own that. Rubric, another one breaking clear of this shelf. We own that. TGTX, just resting extreme strength coming into today. You see this very often, things that lead. Um, take a breather uh, as funds are pretty much already positioned in them. It's minorly extended, and also biotech really doesn't have much influence at all from tariffs. So a lot of things that jumped today were tech or tariff related. And then finally, our holding in ARK-K, this added to the 21 over 21. This is a fantastic proxy for risk on. Take a look at the top 10 holdings on here. A lot of them look pretty good, led by Tesla and clearing the 21, 21 hooking over, and a very obvious stop out should not break below today's low. Here's the rest of the list, and these are carryovers. BJ's uh, consolidating nicely above the 21. Dutch Brothers, after a hell of a pullback after this, and it's with the market. You can see how it stopped going down right after the market stopped going down. No charts complete without a line of the S&P 500 on it, as well as a relative strength line. But you can see there a gap up, nice volume, reasserting itself as a potential leader. Doximity, another power of three, break above a very clear downtrend line here and above the 21, added back to the list. GDX, consolidating just fine there. Robinhood added back to the list, clears the 8 and the 21 right into the 50-day moving average. Lemonade, tight, tried to break out, gave back about half of the gains, but man, this thing has a very large ATR at 10.3%. Hey, Robinhood's right at 10% too. So observe position sizing rules for these. MP Materials bounced at the 21 on Friday. Nutanix broke above the highs from last week. Okta or Okta, back above the pivot of this long flat base, definite leadership quality. Material and fundamentals, SE regaining the 21-day moving average. Spotify making new highs and then pulling back, sitting right on 600. Uber has shown some serious relative strength as of lately and was up today. WGX pulled back, very strong biotech. Yum China, mild pullback. Some of the other China stocks had broken below their 21 that were leading, including KWeb, but this holding up pretty well. And finally, Take Two, massive growth in for 2026, fiscal 2026, which starts in April for them. But nice sideways action with relative strength line trending higher since it's had its big earnings gap up about a month ago. And that is the 21 over 21 list for this week. And that'll wrap it. As always, like to hear from you. The email's don@revereasset.com. The phone's 855 Real Wealth. That's 855-732-5932. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. We think we've done a pretty good job guiding our listeners through not only the bull market, which started in November of 2023, but getting the heck out of the way and not losing a whole heck of a lot during this very harsh pullback, record-setting pullback. In fact, top five quickest of all time on the S&P. But we held at this 5,500 level between the two ATR envelope slash 3 to 4% envelope below the 200-day moving average. I've learned this lesson to not always blow everything out once you break the 200-day moving average. Sometimes the market just needs a couple of weeks to settle and get back above it, and that's what we saw. Now we need to keep it. We need to hold above today's lows on not only any stocks that showed good action, but the indexes as well. And that's why our flagship portfolio is named GROTECTION, because we grow assets during uptrends, protect them during downtrends, or short-term rules are getting us back into the market, as well as good action on leaders. And stick with us every night. We update you on our thoughts on the market. 4 technicians on staff. We know we can differentiate a healthy market from a risky market and protect the downside when things turn risky. And that'll wrap it for Monday, March 24th. This is Don Vandenbord with Revere Asset Management, telling it like it is. It's not how much you make in the market, it's how much you can keep. Now we've preserved our capital. Let's try growing it now. If the market participates, cooperates, and the leaders do as well. Thanks for listening and have a great day.